Welcome to part 2 of series I'm making based on what's going on in today's market. So in the last video, we went over the fact that we have low inventory right now of homes. Year over year appreciation in Seattle is typically around 5 to 6% for single family homes, and across the board in the United States, we've had majority year over year appreciation minus the 4-year span around the 2008 housing crisis. So we have that, and then we also had the third chart, which is national rent essentially always going up. So now that we know where we're at on the macro, what does this actually mean for us homeowners and home buyers that are trying to get into this market? Like, how do we navigate the market based on what we know is happening on the macro level? So one of the things we can consider if we're looking to purchase a home is the fact that the market is so relaxed right now. We're heading into winter, interest rates around 8%. Sellers are offering a lot of concessions. So let's take some easy math. So in a world that has low competition and a lot of seller concessions, we could ask sellers, for example, to buy down the interest rate for us. So let's just say you're looking at a $300,000 condo in Seattle or a small single family home outside of Seattle. All right, 300,000 just for easy math. If you were to negotiate a little bit of a price reduction on that, it might save you $70, $80, $90, $100 a month. However, if we took that same $10,000 price reduction and actually applied that to a $10,000 interest rate buy down, you would save closer to $250 a month. So right now, you would probably not be in a crazy multiple offer situation. Number two, you could have the seller buy down your interest rate, save you a lot of money, and refinance in future. And you could purchase a home and stop renting. That's one of the options you can do. Another cool thing about this market on the buyer side is you can have more contingencies, such as a financing contingency, which includes an appraisal contingency, inspection, which is huge. We can ask the seller to renegotiate or do repairs before closing or give credits, things that we could not necessarily negotiate very well over the last 2 or 3 years when the market was hotter. And then lastly is just general purchase price is going to be, closer to 2% lower than it was last year. All right, so that's on the buyer side. On the seller side, we're seeing that we have a tale of two markets. The first is homes that are marketed really well, they're priced really well, presented well, and perceived value is higher, right? And if they're in a low inventory market, it's a beautiful single family home, which is what a lot of people want here in Seattle, especially after the heart of COVID has passed. People want more space. Those homes are still selling within a week. And then you have the average days on market being closer to 14 days, where it used to be closer to 6 days, which means that there's a lot of homes that are also sitting on market. So you might have noticed that while you're looking online, hey, why are some of these homes, selling quickly, and why are some sitting on market for 47 days? Well, it's because we have a tale of two markets right now. So sellers, be very careful not to overprice, to take shortcuts on the listing side, and because sellers, we need to put ourselves in the shoes of buyers, right? Buyers want a turnkey home. They don't want to purchase at a high interest rate and then have to put in a bunch more money to remodel the place. They also do not want to overpay in this market and potentially get hurt. There's a lot of fear in this market. So we always need to put ourselves in the shoes of others. I hope this helps you. this beginning of November 2023. If you have any questions, feel free to reach out. Have a great day.